Welcome to this lecture on internal controls for small and medium enterprises, or SMEs. In this session, we'll explore how smaller organizations can design and implement effective internal controls to protect their assets, prevent fraud, and support sustainable growth. While large corporations often have entire departments dedicated to risk management and compliance, small and medium-sized businesses face unique challenges. They operate with limited resources, smaller teams, and often less formalized procedures. However, this makes strong internal controls even more important. A single control failure, such as fraud, data loss, or regulatory non-compliance, can have a severe impact on an SME's survival. Let's begin by understanding the objectives of internal controls for SMEs. 1. Safeguard cash, inventory, and other assets. 2. Ensure accuracy and reliability in financial reporting. 3. Promote efficiency and accountability in operations. 4. Prevent and detect fraud and errors. 5. Comply with tax, labor, and industry regulations. Even with limited resources, SMEs can build effective internal controls by focusing on 5 key areas aligned with the COSO framework: control environment, risk assessment, control activities, information and communication, and monitoring. The control environment sets the tone for integrity and accountability. In SMEs, leadership plays a hands-on role. The owner or top management must model ethical behavior, establish clear policies, and enforce consequences for violations. A documented code of conduct and defined approval limits help reinforce this culture. 2. Every SME should identify its most significant risks. These might include cash theft, inventory loss, cybersecurity breaches, or inaccurate financial reporting. Regular risk assessments help prioritize where to focus limited control resources. For instance, a retail business might prioritize point-of-sale controls, while a consulting firm might focus on data protection and client billing accuracy. Control activities are the specific actions taken to mitigate risks. SMEs should design controls that are simple, cost-effective, and scalable. Segregation of duties. Even with a small staff, tasks can be divided to prevent conflicts of interest. For example, the person approving vendor payments should not be the one preparing them. Authorization controls require management approval for large purchases, write-offs, or new vendor creation. Reconciliations perform regular bank reconciliations, inventory counts, and financial statement reviews. Access controls restrict system and data access to authorized personnel only. Physical safeguards secure cash, inventory, and equipment through locks, cameras, and restricted access. Automation can greatly strengthen these activities. Accounting and ERP software such as QuickBooks Xero or Odoo can automatically track transactions, flag anomalies, and generate reports that enhance control reliability. 4. Effective communication ensures everyone understands their roles and responsibilities. SMEs should maintain clear policies and procedures, document key workflows, and establish simple reporting lines. Regular meetings between management and employees help identify risks and reinforce accountability. For example, weekly cash flow reviews can detect unusual spending early. 5. Monitoring ensures that controls remain effective as the business grows. Periodic internal reviews of key controls. Independent accountant or consultant reviews. Use of dashboards to track performance metrics and financial trends. When issues are found, they should be documented, analyzed for root causes, and followed up promptly. Continuous improvement is critical. Controls should evolve as operations expand and risks change. Let's consider a practical example. A small distribution company experienced repeated inventory discrepancies. Investigation revealed that stock adjustments were made manually without documentation. The company introduced a barcode system, required manager approval for all adjustments, and began monthly reconciliations. Within 3 months, discrepancies dropped by 90% and profitability improved. Technology can also empower SMEs to achieve strong controls affordably. Cloud-based accounting and payroll systems reduce manual errors and provide real-time access for owners or external accountants. Cybersecurity tools like password managers and multi-factor authentication protect digital assets. While SMEs might not have formal internal audit departments, they can still maintain oversight through external reviews or periodic consulting engagements. These independent evaluations provide assurance that controls are operating effectively. Common challenges SMEs face include over-reliance on key individuals, lack of documentation, and resistance to formal processes. Overcoming these requires building a culture of discipline and transparency, where everyone understands that controls protect the business and its people. To summarize, internal controls are not just for large corporations. For SMEs, they are vital tools that protect assets, improve decision-making, and build stakeholder confidence. By implementing simple, practical, and scalable controls, supported by technology and strong leadership, small and medium enterprises can achieve both security and growth. In our next lecture, we'll explore emerging trends in internal control, examining how innovation, data analytics, and automation are transforming control practices for organizations of all sizes. Thank you for joining me in this session on internal controls for small and medium enterprises.